Assalamualaikum warahmatullahi wabarakatuh. Today, I will be introducing the core foundation of our case study, which is Investment Linked Takaful or ILT. As you can see on the slide, Takaful serves as a Sharia-compliant alternative to conventional insurance. It operates on the foundational principle of ta'awun, mutual assistance, and tabaruk, which is donation. By utilizing collective risk sharing and strict Sharia supervision, this architecture successfully eliminates prohibited elements like riba, gharar, and maisir. Now, what makes investment-linked takaful (ILP) is unique is that it acts as a hybrid product. It combines this traditional communal protection with personal investment opportunities. If we look at the mechanics, ILP runs on dual account framework, often called the two-fund model. When a participant contributes, the money is split into two distinct areas. First, the majority goes into the participant investment account (PIA). This is managed by the operator under Sharia compliant wakalah or mudarabah contracts to earn market return through asset like equities, sukuk or real estate. Second, a portion is pulled into the participant risk fund (PRF) as a tabaruk donation, which provide mutual identity for all members. To maintain a healthy balance, the cost of coverage and administrative fees are periodically debited from the investment account. However, participants enjoy immense flexibility. They can top up their contribution or switch between aggressive or conservative funds to sustain their policy long term. Ultimately, ILT massive popularity in Malaysia stem from this exact flexibility in today's economic environment. Consumer want more than just basic protection. They want a Sharia compliant tool tailored for retirement or educational planning. Under the regulation of Bank Negara Malaysia, operators like Etika and Zurich are successfully meeting this demand by offering safety net that also drive personal wealth growth. With this introductory foundation set, let's move on to the next part of our analysis.
Next, for conceptual aspects, there are three things that we can discuss. So the first concept is the structural framework and Sharia models. So investment-linked takaful is fundamentally grounded in the concept of ta'awun, mutual aid, and tabaruk, which is donation, prioritizing equity, which is al-ad, and communal interest over commercial risk transfer. This heuristic framework emerged from the 1976 Mecca Conference, which rejected conventional insurance for violating Sharia principles through gharar, uncertainty, maisir, gambling, and riba, which is usury. So to remain legally sound and clear, the system primarily utilized two operational structure, which is the first one is the mudarabah model, which is a profit sharing partnership where the operators provide interest-free loans called to cover any fund deficits, and the second one is which is the wakalah model, which operates as an agent-principal relationship where the operator manages the funds for a set agency fee. So the second concept is behavioral drivers of market participation. The transition from theoretical Sharia compliance to actual market involvement is heavily dictated by key behavioral factors that shape consumer decision making. Religiosity stands out as the primary positive driver, strongly influence the participants' tendency to choose Islamic financial options based on their personal belief. Conversely, perceived risk acts as a major deterrent, negatively impacting consumer attitude and willingness to participate. Ultimately, multi-market traction relies on enhancing consumer awareness, which improve overall attitudes and works alongside social factors and community acceptance to heavily shape the choice of contemporary takaful participants. The third concept is social responsibility and sustainable finance. As the sector develops, the conceptual dialogue has expanded to integrate social responsibility investment, which is SRI, criteria bridging traditional Sharia compliance with global sustainable finance benchmark. The industry has progressed from basic sin exclusions like weapons and gambling into sophisticated movement and addressing environmental, social, and human rights issues through active screening and community engagement. This modern framework is anchored by Maqasid al-Sharia, which contemporary scholars have expanded to protect the environment and sustainable economic growth, driven by the core principle of al-ad, justice, ihsan, kindness, and falah, ultimate success. Social responsibility is treated not just as an option, but as a fundamental Sharia obligation and the ethical foundation of the modern Islamic economy.
Good day everyone, today I will be presenting on operational aspect Investment Linked Takaful or ILT in Malaysia. Investment Linked Takaful is an Islamic financial product that combines financial protection and investment opportunities based on Sharia principle. Unlike conventional insurance, ILT operates through mutual cooperation, transparency and risk sharing among the participants. The operational process begins when the participant make periodic Takaful contribution. These contributions are divided into two accounts, namely the Participant Investment Account or PIA and the Participant Risk Fund, also known as PRF. The Participant Investment Account represents the investment component. Funds in this account are invested in Sharia compliant assets such as as Sukuk, Islamic equities, Islamic money market instrument, and Islamic real estate investment trust or IRATs. Meanwhile, the participants' risk fund functions as a protection fund based on the concept of tabaru, where the participant mutually assists one another. This fund is used to provide compensation for covered events such as death, total permanent disabilities, critical illness, or accidents. In Malaysia, most Takaful operators applies the hybrid Wakala Mudarabah model. Under the Wakala model, the Takaful operators such acts as an agent managing the Takaful funds and receives a Wakala fee for administration and management services. Under Mudarabah model, profits generated from investment are shared between the operators and the participants according to a pre-agreed ratio. Another important operational aspect is underwriting. Before issuing the Takaful certificate, the operators evaluate factors such as an age, health condition, occupation, lifestyle, and financial capabilities to determine eligibility and contribution fees. ILT also provides flexibility through fund switching and top-up contribution. Participants may switch between Sharia-compliant investment funds according to the market performance, financial goals, and risk tolerance. In Malaysia, investment-linked Takaful is regulated under the Islamic Financial Service Act 2013 and supervised by Bank Negara Malaysia to ensure Sharia compliance, transparency, and consumer protection. In conclusion, investment-linked Takaful provides a holistic Islamic financial solution that combines financial protection, investment opportunities, and Sharia compliance through ethical investment management and mutual risk-sharing principle. Thank you.
This case study discusses two important court cases involving investment-linked Takaful policies and the responsibilities of Takaful operators in maintaining ethical conduct, transparency, and consumer protection. The first case is Nur Fazliza binti Ma'suko against Ethical Life Insurance. In this case, the claimant who worked as a retail bank insurance manager was accused of maintaining sales performance by funding Takaful policy purchases under the name of her relative. The policies were later cancelled during the cooling off period and the refund were allegedly returned to her. Ethica claimed that this was done to artificially increase sales achievements and improve key performance indicators or KPIs. After investigations and a show cause process, the claimant was dismissed for serious misconduct and breach of trust. The industrial court ruled in favor of Ethica and held that the dismissal was met with just cause and excuse. The court found that the claimant's action created non-genuine sales and undermined the integrity of the Takaful system. The court also emphasized that trust and honesty are extremely important in the financial and Takaful industry, especially because Takaful operation are expected to follow Islamic value such as fairness and ethical conduct. This case shows the importance of strong internal monitoring system to prevent abuse of the cooling off period and manipulation of sales performance. The second case is Muhammad Ibrahim Saleh against Zurich Takaful Malaysia. In this case, the plaintiff participated in an investment-linked Takaful scheme and consistently paid his monthly contribution of 1,500 ringgit. However, after he withdrew money from his investment account, the Takaful operator attempted to increase his monthly contribution to 3,000 ringgit and later terminated his policy due to low investment fund value. The High Court ruled in favor of the plaintiff and held that the Takaful operator had no contractual right to unilaterally increase the contribution amount or terminate the basic policy as long as the plaintiff continued paying his agreed monthly contribution. The court also clarified that the termination clause only apply to the supplementary certificate and not the basic life protection certificate. In conclusion, both cases highlight the importance of ethical practices, proper governance, and clear contractual terms in the Takaful industry. Takaful operators must strengthen compliance system, ensure transparency, and protect consumer in order to maintain public trust and uphold Sharia compliant principles. That's all from me. I will pass to the next presenter.
I will explain the issue, challenges, and international cases in the investment-linked Takaful. Investment-linked Takaful is a Sharia-compliant insurance product that combines both protection and investment. Although it is becoming more popular, there are still several important challenges faced by the industry. First is the Sharia governance and compliance, where companies must ensure that the investment follow Islamic principles, even though different countries may have different interpretations of Sharia rules. Second is investment risk and market volatility, because participants carry the investment risk, meaning poor market performance may reduce the value of their policy and returns are not guaranteed. Another challenge is the management of the Tabaru fund, which is used for risk sharing among participants and may sometimes face insufficient funds to pay claims, requiring financial support from the operator. In addition, High management and administrative costs can reduce the investment value, especially during the early years of the policy. Consumer understanding is also very important because many people do not fully understand how the investment-linked Takaful works and may not realize the risk involved. Internationally, countries such as Saudi Arabia, Indonesia, the UEA, and Pakistan have faced issues related to transparency, mis-selling, high tape rate, and inflation affecting investment returns. Investment-linked Takaful provides both protection and investment opportunities, but it still takes challenges in Sharia compliance, risk management, cost, and consumer awareness. Thank you.
Moving on to the recommendations, while investment-linked Takaful is a highly effective tool, our case study identified 5 critical challenges. Fortunately, this can be overcome with targeted modern solutions. First, to tackle market fluctuation that disrupt Sharia compliance, we recommend establishing standardized cross-border frameworks where bodies like Panagram Malaysia and AAOIFI align their compliance definitions. Additionally, Sharia board should introduce gradual purification grace periods. This gives fund manager a structured window to rebalance portfolios during sudden market shift without being forced into immediate costly asset sell-off. Secondly, regarding the issue of participant bearing all investment risk, this can feel like a contradiction to Takaful mutual risk sharing philosophy. To fix this, we can introduce Sharia compliance smoothing mechanism such as a profit stabilization reserve within the investment account. This saves a small percentage of profits during boom years to support returns during market downturns. We also suggest default life stage fund switching, which automatically and gradually shift a participant portfolio from high growth equities to stable suku as they age, protecting their wealth from sudden crash. Thirdly, to address deficit and surplus complexities in Tabaruk Fund, instead of relying on interest-free loans, which is sparked from operators, we should implement dynamic pricing and algorithmic underwriting. By leveraging big data, operators can price Tabaruk charges accurately based on real-time trends to prevent underfunding. Furthermore, establishing clear, predefined surplus policies at the start of the contract, such as transparent 50-40-10 split between fund stability, participant and operator performance fees, ensures total transparency. Next, to eliminate heavy upfront wakalah fee that stunt early investment growth, we recommend a regulatory cap of upfront acquisition costs requiring operators to use levelized fees spread evenly over 5 to 7 years. This ensures more of the participant money goes to the work in market immediately. We can also expand direct digital Takaful channels, cutting out agent commissions for simpler products and returning those savings directly into the participant investment fund. And finally, to resolve consumer confusion regarding return versus protection. To prevent accusation of mis-selling, we recommend mandating product transparency sheets with visual dashboards. This replaces dense text with clear digital graphics showing both projected growth and worst-case scenarios. Alongside this is a mandatory annual sustainability statement requirement would act as an early alert, explicitly informing consumers well in advance if a top-up is needed to keep their policy alive past a certain age. Implementing this solution will not only protect consumers but also ensure the long-term sustainability and integrity of the ILT market. To wrap up our presentation, let's look at the final conclusion of our case study. Ultimately, investment-linked Takaful or ILT has proven to be highly successful Sharia-compliant alternative to conventional insurance. By integrating personal investment opportunities with communal protection through a dual account framework, ILT beautifully eliminates the elements of riba, gharar, and maisir. As we have discussed, its popularity in Malaysia isn't just about avoiding what is prohibited. It succeeds because it's aligned with Maqasid al-Shari'ah, the broader objective of Islamic law, by promoting socially responsible investment and creating a positive social environmental impact. However, for ILT to sustain its incredible growth, it must confront the structural challenges we've highlighted today, from market fluctuation and high upfront fee structures to consumer confusion regarding risk. By adopting our proper solution, such as standardized cross-border frameworks, smoothing mechanism for risk management, levelized fees, and mandatory product transparency sheets, the industry can actively mitigate this risk. Implementing these changes will strengthen an operational integrity, stability, and consumer trust of investment-linked Takaful, ensuring it remains a premier tool for Sharia-compliant wealth management for years to come. With that, we conclude our presentation. Thank you very much.